Let's talk about a new federal rule that is going to affect some real estate transactions beginning March 1st, 2026. The rule comes from the Financial Crimes Enforcement Network, commonly called FinCEN. Now, FinCEN is part of the United States Treasury, and their job is to help detect and prevent financial crimes like money laundering and fraud. Real estate has historically been used at times to hide or move money illegally. And because of that, FinCEN has created a new reporting rule focused on certain residential real estate transactions involving all cash purchases. Now, before you get nervous, let me be clear about something very important for brokers. You are generally not the reporting party under this rule. In North Carolina, the reporting responsibility will typically fall on the closing attorney or the settlement agent, depending on who's handling the closing. But brokers still need to understand the rule because it might affect your clients and the questions they are asked during a transaction. Remember, this rule is primarily focused on situations where a residential property is purchased without a traditional mortgage loan and the buyer is using a legal entity instead of an individual name. Examples of legal entities include LLCs, corporations, partnerships, and trust. And in those cases, FinCEN wants to know who the actual beneficiaries are behind that entity. In other words, who are the real people controlling or benefiting from the purchase. So when the transaction falls under one of these rules, the reporting party, the lawyer, will collect certain information and submit a report to FinCEN. This information can include things, for example, the identity of the buyers, the beneficial owners, the address of the property, the purchase price, and certain identifying information about the individuals involved. The important takeaway here for brokers is this: you are not responsible for filing the report. However, your client may be asked to provide additional information during the closing process if the transaction qualifies under the rule. And when that happens, your role is simply to help keep the transaction calm and moving forward. You might say something to your client like, "This is part of a new federal reporting requirement for certain transactions." The closing attorney is going to guide you through exactly what's needed, and that's really the key point here. This rule is about transparency in financial transactions. It's not about accusing anyone of wrongdoing. Most buyers and sellers will never even encounter this rule because it only applies to very specific types of transactions, all cash purchases involving legal entities. As a professional, understanding the landscape helps us answer questions confidently and guide our clients through the process without confusion. The more you understand these regulatory changes, the more valuable you become to your clients. Real estate is constantly evolving, and staying informed is part of our professional responsibility. So if you found this information to be helpful, please subscribe to my YouTube channel. I'm Kim Stotesbury, and I like to keep it real in real estate.